watching Property TV.
Hello and welcome to Property Question Time. I'm Stephen Galpin and this is the show where you can have your property related questions answered by a team of property experts. And joining me today is Joanna Leggett, co-founder of Leggett Immobilier, French property experts. Hi Joanna.
Hi Stephen, nice to be back.
Good, lovely to see you. And Terry Everson, director of Cornerstone Financial Services PLC, foreign exchange specialist. Welcome to you, Terry.
Hi Stephen, nice to be here.
Good. Well, I hope you're all genned up with all your answers, and we'll start off with you, Joanna. I understand that there are now two forms of French residency visa available for those wishing to take up residency there. One appears to require pretty immediate registration or application, and the second seemingly delayed requirement. Can the panel advise on this?
Well, everything's quite new at the moment, as you can imagine.
I can imagine.
If you're looking at permanent residency, you need to apply for that before you travel to France. And you can get a long stay visa from the French embassy in England, and then that, as soon as you arrive in France, then you would need to show that at the prefecture, which is like the town hall, and apply for a carte séjour, which is your permanent residency. I mean, obviously we didn't have to do that before, but you have to hold that carte séjour if you are a resident in France. And so you would have to go through that process of applying for that. And they usually take maybe 2 to 3 months to come through, although in some regions where COVID has affected the staffing numbers, they've been taking up to 6 months to come through.
So it's really a two-part exercise, isn't it?
Yes, yeah. I mean, if you're not already in France, if you're already in France, then you could obviously, and you're a resident in France, you can apply for your carte séjour. So we have a lot of Brits that already live there, but they will have had to have gone through that process before July. So now you've got to apply before you come for a longer stay visa and then change that into a carte séjour.
Right.
But you do have to have there's certain criteria now for getting a carte séjour. You've got to prove your income. So you've got to be able to prove that you have the minimum wage, which has just gone up to 1,500. It doesn't matter if it's 1, 2 or 4 people, you have to show that you've got 1,500 a month coming in to be able to get that carte séjour. So it's basically showing that you're not going to be taking money from the state.
Sure. What happens if you're retired and you're living on capital?
Yeah, as long as you can prove that you have enough money to support yourself, as long as you can prove that, whether that's a lump sum or whether it's a monthly pension coming from the UK.
But you've got to apply that lump sum to a number of years, haven't you?
Yes.
How would you work that out?
Yeah, well, the carte séjours are only valid for 10 years anyway.
Right.
So you'd have to show the 10-year lump sum amounts, and then after that 10 years, you'd have to apply again.
So if you're 80 and you end up at 90 and you run out of money, you're in trouble.
Yes.
Right. Okay. I think I get the picture.
Yeah.
Right. Okay. And that carte séjour, that gives you access to healthcare and.
Yeah, it just basically means that you're a resident. It's a residency card. You'd still have to apply for your social security number to be able to get a carte vitale in the same process as you do with residency. It's in the same building, but you have to be covered by healthcare as well, and you'd have to take up the top-up insurance.
I wonder what the when I looked at this question, I partly looked it up, and there was a visa that you're not obliged to take until you've been there a number of days, or 90 or 180 days or whatever.
Well, you're allowed to stay in the country for 3 months, the 90 days, without having to have a visa, but you have to leave on that 90th day. You can't just overstay without having a visa.
Okay.
And then you're not allowed to return for another 90 days. So where people used to be able to have a holiday home and stay for 6 months and then leave for 6 months, you can't now do that without a visa.
Is that causing much of a problem with some
Yeah,
of your residents?
it is. We have seen, I've got a lot of friends that I've sold properties to in the past that would come for, sort of April all the way through the summer months and then go back for the winter. And now they do have to apply for the visa. Initially, because of COVID, not because of Brexit, that was quite difficult because there were people working from home, the staffing levels in the town halls, there's nobody there. So it was taking a long time. But we have seen that people have been turning around visas now in 10 days. Okay. So it's got a lot better.
Okay. Sounds like it's all getting quite organised.
Yeah,
now.
yeah.
I know when we spoke in earlier shows, it wasn't really until almost the point of Brexit itself that these things became clear, was it really?
Yeah, and even after that, because we went into the pandemic, it was like everything, not just Brexit. Brexit was completely forgotten about. And then the COVID situation where you couldn't travel, you couldn't visit properties, we had to do everything virtually. So it was, you know, the whole last 2 years have all been up in the air, but it's all smoothed out
Has
now.
any of the uncertainty affected your sales figures at all?
No, we've had actually the market in France itself is so strong at the moment. It's you know, you can get mortgages fixed for term for under 1%. So the French are moving. A lot of countryside properties have become really popular since the pandemic because people are realising that they can work from home, so they can have a bigger space and more outdoor space. So we're seeing a lot of cities moving out to the countryside. So the market's actually been really strong, and 25% of our sales we've made virtually. Virtual viewings, virtual e-doc sign. So everything's been done online.
Super
Yeah.
efficient.
Yeah.
I like that. I like that. Okay, all right, Joanna, thank you very much for that. So, Terry, your first question. I see so many adverts from companies offering to save me money in relation to transferring funds abroad. I need to do this for distant family and for possibly the purchase of a property. Has the panel any advice for me on how to select a suitable and reliable company?
Always ensure the company is regulated by the FCA. Authorised payment institution is the term. Preferably a company that's been long established. There's a lot of new ones coming out of the woodwork. I would recommend someone that's got a history, has been around for a long while. And I'd also recommend that the client maybe sort of calls a few different brokers to check the services they're offering and get an indication of the rates, because there could be some big differences depending on who they're talking to.
Okay, so that's differences in rate. Okay, I can understand that, and presumably do all you guys work on a similar sort of fee structure in terms of arranging these things, or?
Yeah, the rates, because all of the FX brokers are trading in the market at the interbank rate. So depending, the structure is normally sort of 0.5% to 1.5% on top of that on the currency transaction. If the transactions are a lot larger, you know, 2, 3, 4 million, the rates may be a bit tighter to interbank.
Okay, and when somebody is searching for this kind of company, I mean, I think we've all been taken at some time or another by a sort of flashy-looking website or whatever.
Yeah.
You think, oh, that's cool. These must be good people. And when you start looking at it, you know, they're in sort of service offices somewhere, and it's not quite as stable as you'd hope. So apart from FCA registration, anything else?
No, that's the main thing. I mean, we would also, if a client contacted us, we would invite them into the office, if convenient. We always think face-to-face is good. We do a Zoom call so they can look at the website, they can look at the platform, and they can do the transaction. And a lot of clients in these days like to do the transaction online. So a lot of brokers don't offer the platform. So I would pick someone that, you know, as a platform to use.
So you can sort of almost do your transaction automatically?
Totally, yeah.
Right, that's very good. And the people you have, for instance, in your organisation, advising people on the phone or any phone inquiries, that sort of thing, do they have any particular qualifications?
Yeah, we're very lucky that we've got our dealers are also sales as well. So as well as talking to the client from a sales perspective, they can talk them through the transaction, how to do the trade and everything about the market. They've all taken all the regulatory exams for compliance, sort of money laundering courses, everything that's required.
Is that how to do it or how to avoid it?
Well, both. No, it's how to avoid it. It's all standard courses, what to look out for. Clients would typically be asked all the same questions by every broker. Source of funds, you know, you have to ask where the funds have come from to buy the property. And the normal KYC, proof of address, proof of identity.
Know your client, yeah, okay. And just on a wider subject there, Terry, I mean, we've seen in the papers just quite recently, haven't we, a sort of expose of people in offshore trusts and buying properties in sort of, you know, nominee names, etc. But is London as bad for that as the press would have us believe?
No, because, well, depends which company you're dealing with. If you've got a company that's got a good money laundering procedures in place and good compliance procedures in place, that can't happen. You may always get a rogue broker that would facilitate that, but obviously it's breaking the law. So all the brokers would typically have all the checks in place to stop this happening. You have sanctions lists as well where you can deal with, and you have different type of customers that can open an account. If it's an offshore trust, there would be what we call enhanced due diligence to check that out, who the owners are and everything to do with that company.
Okay, well that's good to know. Okay, and on that good policing note, we'll go to our break. So join me again after the break when Terry and Joanna will be answering more of your questions.
You are watching Property TV. You are watching Property TV.
Hello and welcome back to part 2 of Property Question Time, joined by Joanna Leggett and Terry Everson. So Joanna, your second question. Can the experts advise me of a comprehensive list of fees and taxes I'll be expected to pay when buying a French property? And if those fees, etc., are any different if I'm buying off-plan? I'm particularly interested in buying a chalet in one of the ski resorts, which seems to be the hotspot for French property now. Is that right?
Yes, at the Alps at the moment is where the prices have risen the most. They've gone up 7%, and if you look at Paris, it's 6.4. So the Alps, people are looking at the Alps. There's also going to be a new train, a travel ski train that's going to run from St Pancras to around 12 resorts directly. So again, it's going to make it even more popular. Also with the Alps, you've got all year round rental. So the summer months can be more popular sometimes than actually in the snow season. So it's a very good area for investment, and hence why so many people buy there. You can buy off-plan and new builds in the Alps, but there isn't that many available. So the stock limits are quite low. So obviously, if you put in an offer, you might have another 2 other clients putting in the same offer on the same property. So they do sell a lot quicker in those areas. With regards to fees, usually the price that's advertised will include the agency fee. So that's always, generally speaking, across all agents in France. And the agency fees are roughly between 4 to 10%, depending on the value of the property. There's always a minimum fee if the property is very low price, because you can pick up houses for 20,000 euros. So there would be a minimum fee on something like that, because it's just the same amount of work. Yeah. The other fee that you would have on top of what you see advertised is the notary fees, and they're generally between 6 and 8%. So you'd look at the net vendor price of the property and add on the 6 or 7%, which will be the notary fees, and that's in all of the taxes. Basically, only 20% of that fee actually goes to the notaire. The other 80% is all the land registry, stamp duty, etc., which comes off that notary fee. So that's the only extra charge that you will have, is the notary fee that won't be advertised in the price of the house. The other thing you might be liable for, because when you buy a property, you've got 2 taxes, a bit like our council tax. One's taxe habitation for residency, and the other one is taxe foncière for the property. The property tax, if you bought on the 6th of June, for example, you'd be pro rata. You'd have to pay the further 6 months for the taxe foncière, and that you may be asked for when you're signing the final act at the notary office. You may be asked for that amount of money to go back to the vendor. The tax habitation, however, if whoever's in the house on the 1st of January has to pay it for the whole year. So if you sold on the 3rd of January, unlucky, you still got to pay the tax habitation for the whole year. So that obviously affects the taxes as well. But realistically, there's no hidden fees, costs or anything like that. It's just the notary fee. The agency fee is included in the price. Unless you're buying privately, then obviously there'd be no agency fee. And then those 2 taxes, which are your annual taxes.
Sounds good to me. I had a place in Switzerland some years ago, and it seemed I was forever paying taxes. I was paying a police tax, an army tax, a local canton tax. It was never ending.
Yeah, no, everything's included in those 2 taxes.
The worst thing was, I went back about 10 years later, and it hadn't even gone up in price, because of zero inflation in Switzerland.
Oh, gosh.
But No, I mean, we see a lot of advertising for ski resorts now in France, and I suppose it's because it is so much more competitive in terms of price, or as opposed to Switzerland, isn't it? Really.
Well, it's some of the best skiing in Europe anyway. You know, you've got very high resorts as well, so that you're guaranteed of the snow. They're very easy to get to. Transport links are brilliant. You know, and we see an awful lot of Brits and other international buyers buying there.
But as you said before, you know, it's all round really. I used to love Switzerland in the summer. It's beautiful, you know, beautiful, clean, fresh air. You're playing tennis or whatever else. And
well, Chamonix, for example, has more tourists visiting in the summer than it does in the ski season because of the outdoor sports and things that you can do and adventuring and stuff like that in the summer months.
Our viewer mentioned sort of buying off plan. Is there much new property being built in the
Well,
Alps?
there is a lot of new build in the Alps, but there are planning restrictions, so it's not going to be everywhere, and that means there is only a limited amount. Obviously, you can save the 20% on the VAT if you're buying a new build, so you'd be able to claim that back. But it is limited, and you know, in the old days, we could take 6 months to sell a property and only have one buyer, but they're just flying off the shelves now with the French market being so strong and lack of stock. It is making it a seller's market, really.
Sounds very good. I think we ought to go then, Terry, don't you?
Well, over the years, I like to go to different ski resorts to try all the different ones out. But some of the French ones are my favourites. I've done Courchevel and Chamonix, so fabulous. Highly recommended.
There you are, customer there. Okay, Terry, your question. I've reserved a property to buy through overseas agents, and I'm a little worried about the exchange rate that might be in place at the point of completion. What steps can I take to avoid an unwelcome rate at the time of purchase without having to expend too much money now?
Yeah, the easiest way to protect against the current rate is to do a forward contract. If you think you're going to complete in a month's time, you can do a month forward. Put down a deposit, typically of 5%, to lock in the trade. And if the property isn't ready in a month's time, you can roll that contract out further. And you can fix that in at the current rate. Obviously, if the rate goes up, you know, much higher, you will not get the benefit because you fixed it in at the current rate. It's quite topical. In fact, I've just set my phone to buzz if we hit 119 to the pound because we're very close, which is a 52-week high.
Is it?
So now would be a good time to get on the ladder and lock the rate in.
Okay. And where do you see us going against the euro?
We technically don't give advice. We're not allowed to give advice. We can look at key chart points on technical analysis. You know, if it breaks certain levels, you know, if it goes through 120, it could then go to 125, and the same on the downside. There has been some volatility with Brexit in the last couple of years, but it's not like the old days in the currency markets where you could have massive swings in a day. It tends to sort of range between what we call one big figure is a big move in a day. So that's like 118 to 119 or 118 to 117. But I would like to think it's going to probably stay between 115 and 122 for the next 12 months. I can't see it breaking out of those areas.
Right. I'm just trying to think back. The last probably three years, I mean, it was up in the mid 130s, wasn't it? Yeah. And then it hit 110. Am I right?
That's right.
Yeah. That's a heck of a swing.
So anyone who's bought their property at 130 and then sold it at 110 have made a fantastic transaction.
Yes, I suppose so. How much do you find your customers are focused in on exchange rates, Joanna?
Oh, it makes a huge difference, you know, because the sales process is 3 months or more, you know, whatever offer you put in at that time, that is the amount you're going to have to pay. So if it drops and you don't forward book or set your rate, you're going to have to find extra money for the property because you can't just base it because you're British on, you know, I haven't got enough money now because the exchange rates. It's really, really important that you do fix that rate at the beginning of the sale so that you know exactly what you're going to be spending. I mean, unfortunately, it could go up and then you could have had more, but it's protecting yourself that you don't have enough funds to pay the property.
I suppose in essence, it's less important for somebody who's buying to move permanently, because you can tend to look at a transaction over a longer period of time,
longer term, yeah.
longer term view of it. I mean, same in this country. They always tell you, don't think of property as being a 5-minute business, because it's not.
It just really depends if you're stretching yourself to an amount of money, and if you say you're paying 150,000, or you think you're paying 150,000, and then the rate drops, and you've still got to pay that 150,000, it could mean a difference of 10,000. So
Yeah.
that's why it's always good to fix the rate when you make the offer, so you know exactly what you are going to be paying.
I mean, on the basis of your sort of estimate of future values, you probably need then to build in a sort of 10% flex, really, don't you, when you're looking to buy something?
Yeah. 10% is a big move in the market. That's a big move.
But if you covered that in your sort of thought process of what to buy and how much to budget for, I'm just trying to think, it's okay us talking about technical details of buying property, and you with your knowledge of trading differences and all the rest of it, but for the average guy sitting at home, family, thinking, what can we afford? I'm just trying to give a bit of a steer as to what sort of flex you'd need to build into that.
The thing is not to be too clever. I mean, we had a client recently, and he tried to wait thinking the rate was going to go a lot better for him, and it went the other way. And we call it a hindsight trade. He said, I wish I'd have done that. If you're happy with the rate when it was, you should have booked it then.
I've spent my entire life saying, I wish.
Yeah, hindsight trade.
Yeah, so I sure remember that one. Okay, well, I'm going to say a big thank you to you both for coming in today. It's all very interesting. So Joanna Leggett and Terry Everson, thank you for your contributions. Really helpful. That's all we've got time for today. So join me again next time on Property Question Time.